Good morning, grade 10s, and welcome to today's lesson on accounting. I hope you are doing well and that you're actually doing a little bit of accounting while being at home. If you remember correctly, yesterday we did depreciation as a year-end adjustment. Please remember to complete that worksheet and submit it before the end of today. But for today's lesson, we are doing two new year-end adjustments. Please make sure that you have your worksheet ready, as you will be doing the worksheet while we are in our Zoom meeting. But for the start of today's lesson, let's have a look at the next video. Okay, this is everything we need for the accounting cycle. So let's have a look at the next questions. All right, the first question. Where in the accounting cycle that we just viewed can we find the year-end adjustments? Anyone have an idea?
If I remember correctly, it was step 5, ma'am.
Good, all right. So according to the information that we have, we know that step 5 is in between the trial balance and the post adjustment. Trial balance. Okay. Next question. Why do we need to do year-end adjustments?
To ensure that the correct amounts are used.
Okay, good. If you remember correctly, we said that it is important to do year-end adjustments before we did depreciation, as this is supposed to be at year-end. We have to have the correct amounts. And if we have the correct amounts, we'll have correct financial statements. Okay. Next question. In what financial document do we make the changes for the year-end adjustment?
The trial balance.
Good. If you just have a look at the previous question, we had the trial balance before we made adjustments, and we then have to create a post-adjustment trial balance. Therefore, we have to go and make the changes on the trial balance. Okay. Why is it important to have a post-adjustment trial balance?
I think that links to the second question, ma'am.
Good. Okay. So it's important to have a post-adjustment trial balance to ensure that the correct adjustments were made. Okay. If we have the correct adjustments, as in the post-adjustment trial balance, we'll have correct financial statements. Why is it necessary to have correct financial statements?
So you can see how the business is doing?
Yes, it's important because your investors have to know that the business is actually doing well. So your financial statements, oh my goodness, this pen is not working. Financial statements shows the or reflects the well-being of the business. Okay. Now, today's year-end adjustments that we are going to cover. The first one is accrued expenses. Now, accrued expenses are expenses that are incurred during the accounting period, which have not yet been paid. Meaning that we have all of these expenses that we still have to pay, even though we've already incurred them. So for example, if we have rent for 4 months, but only paid 3 months. So we still owe 1 month. And this 1 month is our accrued expense at the end of the financial year. Okay. The next one is a prepaid expense. Now, prepaid expense are expenses that have been paid in advance past the year-end date, which is not supposed to be in this year's financial statements, meaning that we paid rent for 4 months, but we only have 3 months in our financial year. Okay, meaning the 1 month is advance. Now, grade 10s, we covered this previously. What generally accepted accounting practice, what principle is applicable in this instance? Can you remember?
I'm sorry, ma'am, I can't remember.
Okay, it's called the matching principle. Now, the matching principle ensures that incomes and costs incurred in generating incomes or creating expenses are recorded in the same accounting period. So we cannot have rent for 4 months that we only paid for 3 because we incurred the 4 months, not just the 3. So this should be taken out. It should be, it should be added. My apologies, grade 10s. This should be added because we still need the 1 month that we haven't accounted for. The 4 months rent that we paid in advance has to be the 1 month removed, as this is more than what we incurred in our financial year. Everyone with me?
Yes, ma'am.
Okay. Now let's have a look at a few examples. First of all, accrued expenses. Now, this example says, Aquatics Limited pays his workers a wage of 1,000 Rand every second week. Wages was paid on the 10th and the 24th of August and will only be paid again on the 7th of September. Account for the missing expense at the end of August. Okay, so Why do we have a missing expense at the end of August?
Ma'am, wouldn't the 2 weeks then be on the 7th of September, so there wouldn't be another one in August?
Okay. We have from the 24th of August, okay, until the 31st of August, did we still have workers working at our company?
Yes.
Okay, if we still had workers working, that means we still owe them the wages for the period that they have been working. You agree with me? So for this period, we still owe the workers wages. But we know that we pay 1,000 Rand every second week, and we're only going to pay on the 7th of September again. So we have accrued expenses of wages that we have not yet paid by the 31st of August. Can anyone tell me what they think would be the amount?
Would it then be 500 Rand instead of 1,000?
Good. So the exact time between the 24th of August and the 31st of August is 1 week. Now, if it's 1 week, that means every second week they get paid for the 2 weeks, meaning that 1 week would be 500 Rand. Everyone with me? Therefore, since we have this, we have to go and account for it in our general journal. Accounting for it in our general journal, the date would be the 31st of August. What would our two accounts be that we need to debit and credit? Can anyone take a guess?
Is accrued expenses an account, ma'am?
Yes, and accrued expenses is an account. Accrued expenses we classify as a temporary liability. Okay, everyone with me on this?
Yes, ma'am.
Why is it a temporary liability? Can anyone take a guess?
Is it because we still owe them the money?
We still owe them the money. Good. Now, if we owe someone money, is that good or bad for the business?
Bad.
Therefore, we classify it as a temporary liability. Okay. So if we have accrued expenses as one of our accounts, what would our other account be?
The wages.
The wages. Okay. If we have wages and accrued expenses, so wages, if you remember correctly, is an equity. What would happen in this transaction?
The wages would become more.
The wages would increase because we still need to pay it, which means that we debit wages and credit then accrued expense. Okay, everyone's still with me?
Yes, ma'am.
And the amounts would just be the 500 that we have calculated. All right, let's have a look at the next example. The next example says, on the 24th of February 2011, the accounting period total in the general ledger of MN Traders' telephone account totaled to 34,800. The February telephone account of 1,240 has not yet been paid. Account for the adjustment entry at the end of February. So what are we doing, grade 10s?
So the 1,240 would be an accrued expense.
Good. That is perfect. So since we have incurred this expense but not yet paid it, we need to adjust for it. Meaning that on the 28th of Feb, we have which two accounts?
The telephone and then the accrued expense.
Telephone and accrued expense. Okay, everyone with me?
Yes,
The
ma'am.
amount is going to be the 1,240 as they gave it to us in the question. All right. Any questions, grade 10s? Nothing. Happy. Here we go. Now we're going to have a look at the prepaid expenses. Now, prepaid expenses are expenses that we have paid in advance. If we have paid this in advance, let's have a look at how we account for it. Danger Limited has a year end of 31 December. On the 1st of November 2019, the company paid insurance of 2,700 Rand. Now, if they paid that amount, what do we know? We know that this amount was on the 1st of November, but we have only until the 31st of December. So let's keep reading. They normally spend 900 Rand per month on their insurance. Okay, pause. So they paid on the 1st of November the 2,700. Okay, but for November and December, because remember we go from the 1st of November all the way to the end of November to the end of December. Everyone still with me? So we have 2 months that are in our financial year that we have to pay for. But we know that per month they only pay 900. Meaning that in our financial year that we have here, how much money did we actually spend in our financial year?
1,800.
1,800 Rand. Meaning that the difference between this amount and the 2,700 has to be what we paid in advance. So that's our prepaid expense. Okay. Now, if we have a prepaid expense and we know that accrued expenses are a temporary liability, what do you think we would classify a prepaid expense as?
Probably a equity.
Okay, think carefully. If we have prepaid an expense, meaning that we actually don't owe someone money, they owe us the work or the facilities that we can use or whatever, is that good or bad for the business?
That's good for the business.
That's good for the business, meaning that if we have a prepaid expense, we classify it as a temporary asset. Because technically, someone owes us the use of their facilities or the necessary work that still has to be done, or the use of the telephone or something like that. Okay, so in this instance, they actually owe us insurance for 1 month, which is good for the business. Now, what do you think will happen in the general journal?
I think the prepaid expenses would then also be an account. So then we increase the prepaid expenses and decrease the insurance.
Okay, so yes, we do have to increase the prepaid expense, meaning we're gonna debit it. But we're gonna decrease the insurance. Even though we're decreasing the insurance, we are technically increasing what? So think carefully. Insurance is an expense that falls under equity. If it falls under equity, we know that incomes are credited and expenses are debited. So if we have to decrease our equity, decrease our expenses, sorry, grade 10s, decrease our insurance, where do we do this? Debit or credit side?
Credit.
Credit side. So technically, we are increasing our equity. So on the credit side, we say insurance has to be, insurance has to be credited, and therefore this happens on the 31st of December, and the value is what? What's the difference between these two numbers?
900 Rand.
900. All right. Everyone with me, grade 10s?
Yes, ma'am.
Okay. Now, you have these questions. Let's see. When are accrued expenses applicable? What do you think?
So that's when you still owe someone else money or services.
Good. We still owe someone the money, meaning that by year end, we have not paid everything. So for the year end, we have to make an adjustment for the unpaid expense so that we can still work with the matching principle. Okay. What do we classify accrued expenses as? We just did this.
Temporary liabilities.
Temporary liabilities. In our examples, what will happen to our accounting equation of accrued expenses?
So you would increase your liabilities and decrease your equities.
You increase your liabilities and you decrease your equity. Equity decreases because our expenses increase. Okay, next question. What do we classify a prepaid expense as?
A temporary asset.
Prepaid expense, so we already paid for it, making it a temporary asset. All right. And what will happen to our accounting equation in the example of prepaid expense?
So the temporary or the assets will increase and your equity will also increase.
Equity will also increase because our expense decreases. Okay. Now, do it yourself. I'm going to give you 5 minutes to quickly do the worksheet so that we can continue with the lesson. Please let me know when you're done. If you have any questions, you're welcome to ask. I am sitting and waiting for you to get involved.
Ma'am?
Yes.
I see we have the two different questions we have to answer, but there are only the 3 lines. So should we do the accrued expense as only one?
So if you have to change the value of the accrued expense and you have to do this twice, you can actually go and add the 2 values to only give 1 entry. Okay, so if you go and have a look, let's just quickly have a look at the question. We know that we still owe this amount and we still owe that amount, and therefore we can just go and say that our accrued expense is the total of those 2 transactions. Okay.
Okay, thank you, ma'am.
All right, grade 10s, 1 more minute. Alrighty, follow my lead. Now, we know that on the 28th of February 2002, the following transactions has not yet been accounted for in the books of Apple stores. Therefore, the February water and electricity account of the 1,230 has not yet been paid, and an account for repairs of 500 is still outstanding. What are we classifying this as?
Accrued expenses.
Accrued expenses. So on the 28th of Feb, we are writing what?
Ma'am, I wrote water and electricity and
Good.
then repairs.
Water and electricity and repairs. Perfect. Okay. Are these being debited or credited?
Debited.
Debited. Good. And then what do we credit?
The accrued expenses.
Accrued expenses. What is the value of the water and electricity account?
1,230.
And the repairs?
500.
Giving us a total for the accrued expenses as?
1,730.
Perfect. All right. Question 2. On 28th of February 2002, the following appeared in the pre-adjustment, so before the adjustments have been done, trial balance of Typo Stores. The insurance was 23,200 and rates were 14,500. Now, according to the adjustments, they say the insurance amount includes an annual insurance contract for 4,000 Rand taken for the period 1 September to 31 August. Okay, so let's create a timeline quickly. We have the 1st of September and we end on the 31st of August. Now, how many months do we have until our year end of 28th February?
6 months.
6 months. So somewhere in the middle, we know that the 28th of February is our year end. So we have 1, 2, 3, 4, 5, 6 months there. And we have 1, 2, 3, 4. Whoop! That was too far. 1, 2, 3, 4, 6 months. So 6 months between 28th Feb and 31st of August, and 6 months between the 1st of September and the 28th of Feb. Now the annual insurance contract was for 4,000 Rand, meaning that we have to only include how much money?
Only 2,000 Rand, the same as the 2 weeks for the wages.
Good. So half of the year is half of the amount. Okay. Adjustment 2 asks us, the rates amount includes a 2,500 in respect of the next financial year. Okay, which means we have to do what with the 2,500?
That would be a prepaid expense.
Prepaid expense. And we know that this piece of the insurance is also a
Prepaid expense.
prepaid expense. Well done. So let's have a look at how we're going to write this in our transactions. We're going to say on the 28th of Feb, which is our financial year end, we're going to include what?
I said we debit prepaid expenses and then we'd credit insurance and rates.
We debit prepaid expenses and we credit insurance and rates. Now, if we go according to this, what was our insurance amount?
2,000 Rand.
That we had to remove, and our rates amount that we had to remove?
2,500.
2,500. Sorry, grade 10, this should be on this side. My apologies. We are all human. I'm not always perfect. Okay, so what's the total for the prepaid expense?
I said 4,500 Rand.
4,500 Rand. Okay, just quickly show your calculations. So we know that the 4,000 Rand for the insurance was only for 6 months out of the 12 months, giving us 2,000 Rand as our new total. We know that our rate was 2,500, so we didn't need to go and calculate that. Therefore, our prepaid expense total has to be the 2,000 Rand plus the 2,500, and that gives you the 4,500 Rand. All right. Let's look at a couple questions quickly just to close off the lesson. By looking at the first question, what is the financial year of the company? So what are the dates? Let's go back quickly and have a look at it. They're talking about 28 February 2002. That gives us a financial year of what?
The 1st of March to the 28th of February.
1st of March 2001 to 28 Feb 2002. Okay. What is a pre-adjustment trial balance?
Before we do all the year-end adjustments.
Good. So after we've accounted for everything in our journals and in our ledgers, we then have the pre-adjustment trial balance before adjustments. All right. Looking at question 2, what type of adjustment is number 2? So let's have a look at it quickly. Adjustment 2, the rate amount includes 2,500 in respect of the next financial year. What did we call it?
A prepaid expense.
A prepaid expense. Okay. And last question, how many months is the portion of the prepaid expense for the insurance contract? We just worked this out.
6 months.
6 months. So we have the prepaid portion is only the 6 months that we paid in advance. All right. Okay, grade 10s, thank you so much. I appreciate your participation in this lesson. Please go and submit your worksheet that we actually just double checked for you on Google Classroom so that I can see where you made your errors, where you need improvements or need re-explaining, and then we can work on our accounting again tomorrow. Have a good day.
Thank you, ma'am.